Hello everyone, this video is with Trader XO. Trader XO went from losing absolutely everything in 2017, 2018 to turning his trading around and finally becoming profitable. He'll share how he did that, both the strategies and the mindset. He'll go into detail explaining how his setups work in the market and even shares the exact strategy he plans on using to turn $50,000 into $10 million over 10 years. I'm going to be putting together a write-up of the key notes and takeaways I had from this lesson. If you want access to that, I'll be sharing it in my Telegram, and there's a link for that in the description below. Enjoy the episode. Welcome to the podcast, XO. It's a pleasure to finally have you on. Hope you're well.
Yeah, hey Krush, thank you. Thanks for having me on. It's been long overdue, right?
100%, man. We've got a lot of history in the space together, mostly positive.
And some negative, but it's all banter, you know, it's all tongue in cheek. Sure.
We've both seen each other grow as people over 7 yeyears now, 6 years, something crazy like that.
It's around 6-7 years. It's been an epic journey, hasn't it? We've both been on our own journeys, and it's finally long overdue that we caught up on stream, and here we are.
Yeah, we've just been speaking for, I just noticed, 40 minutes before this episode even began. But we both started in a similar place, 2017, from what I've been detecting. And you were degen gambling like I was back then. What got you in? What drew you to the space? What was the first year like?
Yeah, it was fascinating actually. So back in 2016 was our first came across Bitcoin. I was obviously curious about it, but it wasn't until 2017 where I started trading Bitcoin and really started taking more active interest around about March 2017, you know, having done some research and looking at the Bitcoin prices. And then as you do, you know, you go into YouTube, you start searching for Bitcoin, you see these household names talking about how Bitcoin is going to go to $1 million. And then you think to yourself back then, well, Bitcoin's $1,000, you know, I've got 10,000 pounds or dollars saved up. I could go out and buy 10 Bitcoin back then, which was fairly cheap, you know, at 1,000 Bitcoin a piece. And then you think, yeah, if I can just hold this for the next 10 years, I'm gonna be a millionaire. Essentially, that was the thought process. And then fascinating, lo and behold, having no trading knowledge, even though I was working in an investment bank, working alongside traders, you know, not as a trader myself, but more on the tech side, on front office, working closely with traders on trading systems. It was at that point that I took an interest in, you know, the world of altcoins. Like, hang on, there's a bigger world out there outside of Bitcoin and Ethereum. There's all these altcoins out there that are being pushed as being great projects that could outperform Bitcoin or be the next Bitcoin. That if you could buy XRP for under a cent and it goes to $5, that's a 500x. So it was just the incentivization for looking for the next big project to give you that home run after initially, you know, buying Bitcoin and just looking to hold it. It's like you just jump into the world of shitcoining, and the rest is history at that point. Poloniex, Bittrex, Cryptopia, Ether Delta, back in the days, many of those exchanges have disappeared or the volume has just dissipated. You know, it's fascinating to see where we are and how far we've come today.
Yeah, there's nostalgia in those names.
Absolutely right.
I remember jumping from platform to platform, doing whatever to make money back then. I mean, it was 2017. I at some point ran an arbitrage operation with someone I found on Reddit who was in a country where arbitrage was very easy, and it was just money printing. It's crazy what happens in these bull markets. But despite doing so well, and I think you did really well, you didn't manage to keep it, right? What went wrong?
Yeah, you know, like I said, it was one of those. It's just the euphoria surrounding the markets in 2017. Bitcoin caught a rally to 20K. And then at that point, it was quite fascinating because I was heavily positioned into altcoins. So it's quite frustrating watching Bitcoin rally, but your altcoins are just bleeding lower down. Because you have to remember, back in them days, altcoins were the markets for altcoins were against Bitcoin. So you're watching your Bitcoin count go down as Bitcoin is rallying and your altcoins are bleeding to death. So to some extent, you know, capitulated on my alts in November near the bottom of 2017, jumped back into Bitcoin, managed to catch the moves back up to, you know, 19K, 20K. And then come January, when Bitcoin started breaking down and everybody started rotating into altcoins, it's like, right, time to buy Neo again because, Neo did really well last time. It went from $2 to $50. It's back down at $10. Jump into Neo, jump into Stratis, bought Z Classic. In fact, I went literally all into Z Classic, and that was the big one where, I think I put something like 5 Bitcoin at the time. The 5 Bitcoins that I bought for $5,000 and just threw them into Z Classic, charted the BTC pair up, and looking for that Bitcoin private fork out of Z Classic, and that's probably where I've made my biggest gains ever since. Unrealized gains, I should say, because on the way down it's not so pleasant. On the way up, it's a lot of fun. But 2018 I think was a real wake up call. It was a brutal market. It was one where it tests you, like, from everything you've consumed in terms of technical analysis. Can you really trade the market both ways? And I see the same flaws in today's crypto circles. A lot of people are jumping into the markets. They've all made fantastic money on the upside, but when the market's going down, they're so accustomed to buying the dip. They don't know how to take profits. They don't know how to short. And eventually, 9 months later, 12 months later, you're back down at 80% drawdown. And we've all been through it. There's no denying it. Anybody who hasn't has been very fortunate, or they were very sensible to take profit and just walk away. So it is what it is.
There's like two types of traders: those who've been humbled by the market, and those who are about to be humbled by the market.
Absolutely. Yep.
So I definitely want to go into trading both ways and why you do seem to be so good at it relative to a lot of other traders. But I don't want to quite move off from your initial starting journey, because you mentioned euphoria was one of the mistakes and that you lost your money. What would you isolate as the core reasons why you made it and then weren't able to keep it? What were the biggest top 3 lessons which you think newer traders should hopefully take on and not have to learn from the market?
Identifying the key turning points in the market. Number one, when the market's trending up, it goes through a phase of distribution. At that point, can you identify risk? So it comes down to identifying risk in the markets. But number 2, can you manage your money, manage your capital? You can have a losing streak of trades. You can have a rough patch. But as long as you're managing your capital and money management, you should be able to survive and eventually see greener days out there. I think the third aspect is the whole emotional aspect. I think marrying the tech for the projects for the tech. Back then, you look at projects like Amigo, Stratis, 10x, Neo. These are all being hyped as the next big blockchain world adoption. The Chinese are going to adopt. The Chinese government is going to adopt Neo. It's going to be the gateway to so many of their systems.
It was the Chinese Ethereum, the Korean Ethereum. I remember.
Yeah. So and then you realize, this is all just nonsense. It's just magic internet coins that everybody's trading. They've got a vested interest in them. They've got an emotional interest in these projects. But truly, it's just a chart, isn't it, at the end of the day? I don't care what the project is. If I can look at a chart, I think I can make money from A to B, whether it's on the way up or on the way down. That's all I'm bothered about nowadays.
So I actually, don't worry, I was humbled by FTX, but I actually managed to keep my 2017 returns, most of them. I shared it on the account. I went up to a high of about 1.2. Mil, and then only lost about 400k, which is a lot, but for unrealized gains, that's a decent amount to keep. And listening to your points, it's because of my maths background, I had the capital management in mind. I just constantly kept thinking, like, these returns are outrageous. They're going to compound to make me richer than Warren Buffett. There's no way this can go on. Now, I couldn't identify trend shifts. I couldn't really identify, my emotions weren't anywhere near what they are now, but just that single skill of capital management managed to help me keep some gains from it,
Yeah, and I fully agree with you. And one of the things that I promised myself in 2018 on the way down, once I was at the bottom of the barrel of it all, having experienced what I experienced, it was an emotional roller coaster. It definitely hurts, the amount of effort, blood, sweat, and tears that you put in, and to see all your efforts vanish. 2021, 22 was kind of fulfilling, because it's kind of like me sticking my finger back at the market, not the market itself, but to say, you know what, you screwed me in 2018. You're not going to do it this time around. I'm going I'm going to enjoy the journey on the way down with you. And that's kind of my redemption arc. I waited a long time for the markets to rally. I call it the market rally. I call it the Bitcoin rally. I call it the altcoin cycle. Managed to exit literally at the top of every single alt rally that we had from 21 to 22. So in May, in August, and then again in November. And then I look for the big short all the way down in 2022, which was driven by macro conditions. So it's kind of been a painful journey, an emotional journey, but one where, I'm very, very content now with my trading style. One that I've come to peace with, that, I'm really comfortable trading the market both ways. It doesn't really matter what people say or what people's thoughts or opinions are. You have to understand the crypto space is heavily biased with regards to being emotionally invested. So if you're looking to short the market, people are going to let you know about that very, very quickly. So sometimes it's best just to do it in silence and just go about your business very, very quietly.
Could you tell us a bit more about 2018? I know a lot of traders listening are going through something similar right now, where they made a bunch in 2021 and now are, like you put it, at the bottom of the barrel. What was it like for you down there? How did you get out?
Yeah, it's interesting you asked that, because you know what? If I'm going to be truthfully honest, I think when you realize that you can do really well in this space without any systemization or any structure of trading, you think you can do it. You think you're pretty much made for it. You consider yourself to be a great trader. Truth is, you're not. You don't have a system, you don't have a structure, and you soon find out how good you are when the market turns the other way. And at that point, I thought, okay, that's fine. If I managed to preserve some of the gains that I made, I wasn't completely out of the game. I still, when you look at the bigger picture, I did fairly well, considering my starting capital and where I was by the end of the bear market. But at that point, I decided it's probably best to go back to work and really hone my skills in trading whilst I'm learning, working full time and learning on the side. I think 2019 was the turning point for me, Karush, if I'm honest with you. That's when I really started paying close attention to price action trading, watching some of the flow trading as well. And I think that's pretty much when I really started gaining confidence, because we remember
What happened? How did that happen?
I think I gained confidence because when Bitcoin rallied from 3K to 14K, everybody was euphorically bullish. And I recall looking to short Bitcoin from 14K, 12K, 10K back down to 6K. And it played out. And I was like, you know what? It feels good. I finally have nailed to understand how to short the market successfully. And then I had another stab, Bitcoin rallied again from January 2020 to 10K, and it fell off its perch in February, March with the COVID crash. And again, I managed to caught that. And, at that point, you accept it doesn't matter what people think. It as long as you've got conviction in your own system and you can systemize it. And the way to get to that level of conviction is by journaling your trades, having a trading manual. Because if you haven't got a trading manual, you don't have any structure, you don't know what your best strategy is. And one question I always ask to anybody who's aspiring or new to trading, can you honestly tell me in a clear, defined manner what your best trading setup is and why? If you can't do that, then you don't understand your own system yourself. You don't understand what you're good at. And if you can't essentially quantify or qualify essentially what are your best setups, why are you trading? You shouldn't be trading at all. So there's a difference, I guess, between trading and investing. But I'm purely talking about trading here as a day trader, as a swing trader, as a positional trader. So I think that's the turning point. Sat down at the end of 2018, created my journal, had a trading system, created a plan, very methodical about it and stuck to it and just learned from my mistakes. But the more mistakes I made, those mistakes were very, very small in terms of capital being risked. And the more data that I accumulated, the better that my performance became. Because in 2019, I was over trading. But nowadays, I'm only looking for 1 or 2 trades a week where I can really capitalize. And back then, it was very sporadic, just random. Oh, let me hit this level, let me trade this level. I think this is low time frame resistance. And, over trading is a killer of an account. And really slowing down and just looking at what the best traders are doing out there and understanding how many trades they're taking on a monthly basis, it's quite inspiring.
It's so interesting that that's your turning point, just journaling. because it just shows the importance of journaling, capital management, emotional management, because I'm sure you journal your emotions as much as you do your actual trading. And the actual setups themselves doesn't really matter, because as long as you're journaling it and you're getting rid of the bad setups, eventually the setup will get good by itself. You just need to, commit to the process.
Correct, yeah. And the key to trading is do one thing, do it well, master it. Focus on your winning trades. The bad trades, just leave them out. If you found an edge is just one system or one setup that you can apply across any market, any time frame, it's a beautiful place to be, because you've now defined your edge. But you know what? The biggest edge isn't in system or strategy or technical efficiency. The biggest edge you have is your emotional discipline. If you can manage your emotions, because it helps you determine whether you're going to go into a trade or not, whether you're just pouring into a trade or is it the fear of missing out. If you can hold that back, I think you're in a much better position, because with emotional discipline comes patience, and with that patience comes conviction. Where you want to do your business, why do you want to do business at that level? You should already have a predefined plan as to why you're looking to execute at this level and what you need to see to invalidate your idea to get out of the markets and preserve your cash.
How have you built your emotional discipline for trading?
It's an interesting one. I think the easiest way to define it is, you can probably appreciate this, and I'm sure many people can. When you see price running away, there's a tendency or fear of missing out. So you want to just jump in and get any exposure, because everybody's talking about Bitcoin going higher. It was during 2019, again, when Bitcoin rallied from 3K to 14K. From 10, 11K to 14K, I missed that move. And at one point, I was questioning myself, like, have I just sold too soon? Am I literally going to miss out on the next big bull market rally? And it was awful, because I'm watching price in this range. It wasn't coming back down to 10K, 9K for a few months. But I had my conviction that surely this is a top. This looks to be a top to me. This looks to be a bear market rally from everything I've understood. That to me was a turning point in emotional discipline. Sticking with my conviction, recognizing that there's so much euphoria out there that I'm fighting my own battles to stop myself from jumping back into the market. I'm thinking, no, I've made money on the way up. I'm happy with my profits. If Bitcoin goes to 15, 16, 18K, tough shit, I've missed it. It is what it is. That's it. That, for me, was the turning point of the fear of missing out, how to get away from it all. And I lived through that throughout the summer of 2019. And eventually we saw what happened in August, September 2019. Price fell off a cliff, went back down to 8K, then 6K. And that was it. That was a turning point from a emotional discipline perspective.
So nothing can replace that real experience, can it?
Nothing, no. Like even now, Krush, if I miss a move on Bitcoin on the upside, no problem. Guess what? It's going to come back down. I can hit it back down then, can't I? So what have I truly missed? For example, we saw Bitcoin go from 28 to 30K recently. I didn't catch the move. I caught the move from 30K down to 27K. Does it make a difference? Not really. As long as I've caught one part of the leg, whether it's on the way up or it's on the way down. And that's how I look at markets now. I don't care if something has gone up 3-4x, because I'm now thinking, all right, I've missed the move up. Do you know what? So at some point, there's going to be a turning point, and it's going to be an opportunity to make money on the way down. You can probably appreciate it's very difficult to time when a market rally is going to happen off the lows, right? It could take months, could take years, could even take a few days. We just don't know. But one thing is for certain, when the market rallies, it will go into a phase of distribution. And from a phase of distribution, you can anticipate this will break down, whether it's next week or the next month. It will break down, and I want to be positioned for that because I know I can capture the move on the way down. That's personally why I find that I'm very good at shorting, because I have a knack of understanding when the market is going to break down, where there's risks associated, and I'm looking to maximize on the shorting opportunity. And I think there's a massive dynamic between long in the market versus short in the market. Short in the market, I think, is the truest test of a trader. It is so technically difficult to short markets. It's very choppy. It's low volume. You get these short squeezes happening much more regularly. Versus long in the market or being long side of the market or being bullish, it's just a straight rip up. It doesn't let you in. So when the market's bullish, it really flies. When the market is bearish or there's a downturn in the market, it's a slowly down, followed by a sudden drop, then consolidation, spike up, then it drops. So it's very, very difficult to trade. You really have to be have your wits about you as a technical trader, and I think that's what truly defines you as a trader. When you know you can trade the market both ways, effectively, efficiently with the system for long in the market and short in the market.
You're making me want to go short the market, man.
Are you looking at Bitcoin now?
I actually was for a second. I was like, where's because I took a short recently on it. I just wanted to see it. But what I was going to say is, so would you say that's your bread and butter setup? Wait for a rally, bear market type rally, and then look for distribution and try to nail your shorts in there?
My whole system is based on two patterns: accumulation and distribution. On the way up, accumulation; on the way down, distribution. What is accumulation and what is distribution? When you truly look at it, it's just a range-bound environment. The key to nailing accumulation and distribution into a trend is the breakout of the range. So what does that tell you? Well, if price has just started to come in, if price has just developed a range, that's not the tail side of accumulation or distribution. That's just the formation of a range. Once you've got the swing low and the swing high established, you know that price is likely to trade within that range for quite some time. Could be weeks, could be days, could be months, I don't know. But one thing's for certain, when it comes to the tail side of distribution or accumulation, you now know that the probability has increased for the breakout of the range. That's when I really start positioning in for my swing trades. I stop trading the range and I start thinking about, right, the next spike of the high or the low, or close to the highs or the lows, is where I want my swing trade to start from. That's how I transition from being a range trader to anticipating there's a good chance or probability now that over the next week or so, this could break out the range and trend. And you know what happens with the market trends, that's where you're going to make most of your money. So that's the core of my trading, along with the basics of supply and demand trading, accumulation, distribution. And once price is in a trend, then it's very plain sailing from that point onwards.
And would you say you look for any intraday trades or just try to catch big swings during those accumulation or distribution phases?
No, you have to evolve as a trader. You have to go with what the market is giving you, what the volatility is out there. And if you were swing trading 12 months ago, altcoins, Bitcoin, it was easy on the way down. So as volatility becomes compressed and the tie to the small of the trading range, you can't swing trade anymore. You cannot hold a trade and anticipate that you're going to hold this for 4 to 6 weeks and you're going to get a breakout. It's just not there. The trade isn't there. You have to adapt accordingly to the time scale and the time frame of the trade. So I can tell you, last year in 2022, my average trade time was 2.5 to 3 days. This year alone, my average trade time is 11 hours. Yeah, I'm using the same strategy, same principles. The only differential factor is the time concept. How long am I in a trade for? Time in trade, and how long do I think it's going to take for price to play out to get to my objective? And that's it. What I've noticed, that had I applied the same strategies or holding time frame that I did in 2022, I would have taken a loss, I would have round tripped, and I would have taken some significant losses as well. So you just have to be adaptive to what the market is giving you. And sometimes, yes, you do have to, drop down onto the 1 hour, onto the 30-minute, 15-minute time frame for execution based upon a 4-hour chart setup. You have to scale down. And in a bull market, you can scale back up. You can go to the daily time frame, the weekly time frame. So yeah, you do have to have that fluidity and flexibility in the markets.
A huge part of adaptability is the ability to be able to identify the market conditions you are in and the market conditions you're trading. What is your favorite way of identifying that?
My favorite way to identify it essentially comes down to volatility and volume being traded, and just looking at the overall heuristics or a holistic view of the markets across the board. Are we in a bull market? Are we in a bear market? Are we in a downtrend or are we in an uptrend? And ultimately, when I zoom out the bigger picture, and if you look at Bitcoin, for example, we've had a fantastic rally, but really when we look at the bigger picture, we have been in a downtrend. This is the first real significant rally that we've had on Bitcoin in well over a year. And people are calling this the bull market? I'm not sure it is. I still think and I believe that this is just one big macro range that's been set up in anticipation for the next bull market run. And I think that's going to surprise a lot of people. It's going to catch a lot of people off guard that Bitcoin has failed its so-called bull rally here and that we could see rejection lower down. That's not bearish. On the way down now is this is the range being formed. This is really, really brilliant buying opportunities in the next 6 months, as far as I'm concerned. So anybody who's missed out on buying Bitcoin here at 15, 16K, I do believe there's going to be a second opportunity. And what's to say that we can't go lower down? And people will confuse that as, hey, Excel's being bearish, is calling for 14K. No, that's me being really bullish. I'd love to buy Bitcoin at 14K. Hell, give me 12K. I mean, that to me is a fantastic buying opportunity. So it's funny how I'm being classified as being bearish when in reality I sold 63K. I called it on the stream. I called it my timeline, getting out of Bitcoin, and I've heavily been advocating for the fact that if you're looking to become bearish on Bitcoin here, you're doing it wrong from an investment perspective. You should be really thinking about buying Bitcoin over the next 3 to 6 to 9 months heading into the next halving. So that's just my view on the current schematics here.
Yeah, anyone who calls you a bear or a bull, I think it's gravely misinformed. You're clearly just a trader, So you're looking at the halvening as a major important point for Bitcoin coming up?
Correct, yeah. I think once again, Karush, sentiments, narratives in the space always work well, regardless of any macroeconomic condition. Even if we are heading into a recession or whether the recession has played out or not, I think it doesn't really matter. There will be enough sentiment and positioning because as market participants, we're always looking for good opportunities out there, regardless of market conditions. And I think Bitcoin will do well. I'm not sure how well or how high. I'm not here one to predict where price is going to go. I don't think it serves any purpose. But one thing I can comfortably say is that if we are fortunate enough to see Bitcoin print a low in the latter stages of 23, whether that's a higher low at maybe 18 to 20K or a lower low at 13 to 15K, it's a brilliant buying opportunity. One thing I can say, I'd confidently, quietly bet upon it, is the fact that Bitcoin will be significantly higher come the summer of 2024, post-halving. I really do believe that. I struggle to see a world where Bitcoin, after the halving, is somewhere down at 10K. If so, then all markets must be in for a rough time. Every market.
Well, I agree with you, but I want to caveat that with, and I tweeted about this today, I think too many people are giving way too much credit to the fact that a bull market may or may not come. That shouldn't be part of your plan because that's not in your control. You should be focused on winning regardless of whether or not there's another bull market. And when you're seeing loads of examples of traders succeeding in these market conditions, really well, I might add, there have been so many trade opportunities in 2023. Stop thinking about the bull market to save you. Focus on other stuff, on actually making it now.
Yeah, exactly. And you know what? As a result of it, even if a bull market comes, mid-bull market, all I'm going to be thinking about, right, when can I short this shit down? That's all I'm thinking about. Straight away, that's what I'm thinking. Right, this is going to go up. When do I cash out? When does it stop? When can I start making money on the way back down again? That's it. Up, trade money on the way up, trade it on the way down. Capitalize both ways. And this is the misconception, hey, alt season's here. No, alt season is both ways, on the way up and on the way down. Why just stop on the way up? What about all the price action on the way back down? You can make some significant gains on the way down. Why not take advantage of that?
What are the difficulties of shorting altcoins or just crypto in general, especially because I know you do it with a decent amount of size? Why do you think you succeed where others fail?
It's difficult to understand why others fail. I know why I succeed. It comes down to, again, just the ability to read price, understand where we are in the market cycle, understanding where we are in terms of macroeconomics, the business cycle, the market economic cycle. You don't have to be a macro pro. You just got to have a basic understanding of the fundamentals. What drives markets? It's liquidity. Liquidity is what drives markets. Whether people want to accept that or not, the charts show a good correlation between global liquidity inflows and how risk-on appetite is met with global liquidity. And when liquidity is drained out of the market, it's a risk-off environment. Dollar catches a bit, risk-on assets bleed. Bitcoin, as far as I'm concerned, is one of those assets that is heavily dependent upon liquidity provision, liquidity being driven into the system. Every time it does, every time we look at the Fed balance sheet, when reverse repo and the TGA, right? It's like when the Fed balance sheet goes up, all liquidity is provided, then guess what happens? The Bitcoin chart seems to rally. And when liquidity is pulled, Bitcoin starts rolling over again. So I think just having an appreciation for macro, good technical analysis and managing your emotions and knowing or accepting that, you know what, there's a good opportunity here to make money on the chart both ways, ultimately.
So the biggest thing you look for on the macro is different indicators of liquidity, and you go risk on or risk off, hugely influenced by that.
Partially, yeah. It just depends where we are in the market cycle, because you've got different stages of a market cycle. You know, you've got growth, you've got inflationary environments, you've got reflationary environments, you've got disinflation, deflation, and recession. So it's understanding where we are from a higher time frame perspective. Which environment are we in? Well, clearly, right now, we're going through a phase of rate hikes. So we know that we are going through a phase of credit tightening. If credit's being restricted, there are going to be lag effects into the economy and the business cycle. And when that happens, what do you think that means to markets? It means that, well, markets are not going to perform very well, because we can see clearly that markets perform very well when growth is on the way up, inflation is relatively low, and for example, the PMIs are performing quite well. They're showing good signs of new orders and backlog of orders coming. The economic cycle is very, very healthy, and there's a real appetite for risk on. But when we go through a credit phase or a credit cycle, that's when we see things break, the banking sector break, markets blowing up, markets falling off a cliff, Bitcoin breaking down. Why? Because of this tightening of credit. And I still think the worst is yet to come, unfortunately. And again, that's not being bearish, right? Because we have to understand, why are we always overly bullish at the highs of Bitcoin at 69K? Everybody's excited. That's the time when you should be thinking about, shit, I need to get out of here and maybe start taking some profits. And now on the way down, it's all doom and gloom. Really? This is going to be one of the best buying opportunities that we're going to have for the next cycle, surely. So, you know, that's kind of how I view it. Not bullish, not bearish. I just want to buy here because I think this is a great value. And heading into recession, markets are forward looking by 3 to 6 months. By the time the global economy is in a recession, the markets will have bottomed by then, because markets price this in anticipation that, yep, we know recession's coming. Thank you very much. We're now looking for signs of encouragement. So therefore, we're going to start positioning, because even if the recession does come in the next 2-3 months, you know, whenever that is, well, guess what? The bottom of the market's already been and gone. See you later.
You have a abundance mindset with opportunities to trade, and it just shines through that there's no fear of missing out. This is the time to buy. I can buy now. I can buy later. There'll probably be a better opportunity. Great if there is a better opportunity. Same way on the way up. If I sell now, I might miss some profit, but you know, I'm just thinking, how do I take my profit? How do I not be greedy while everyone else is being greedy? Counter trade the emotions.
Yeah, absolutely. Absolutely. It's just about keep winning consistently and watching your account balance keep growing. Ultimately, that's what it comes down to. You know, as long as your account balance is going up and to the right, you're doing a good job. That's it. That's it. That's ultimately what trading is about. There's your equity curve. It needs to go up and to the right. That's it.
Well, speaking of account balances going up and to the right, you mentioned something quite crazy to me before this podcast.
Yeah.
So you're planning on taking a $50,000 account up to $10 million, or at least that's your goal.
For me, okay, so there's two stories. First of all, I've been very successful as a trader. I've been very profitable. I've been really blessed. It's not been easy. It's been a very difficult journey. A lot of pain, bloodshed, sweat, tears, emotional roller coasters. Been there, done it all. I'm in a position now where, do you know what? It's just me against the market. This is my own personal challenge. I want to take, as of this year, a $50,000 account to $10 million in a 10-year time frame. So it's certainly a steep challenge, but it's certainly one that I think after trading the markets for 6-7 years, I've got everything I need at my disposal in terms of the experience, the knowledge, the technical analysis. And it's now time to prove myself that, you know what, I don't want to go from 50 to a mil. I want to go from 50,000 to $10 million. And I really believe I can do it. I genuinely believe I will do it. That's how confident I am. But there's a key ingredient here. It's not, if you're overconfident, you'll blow up. So it's just having conviction with confidence and just being rational about your goals. And I think over a 10-year duration, and this is me purely talking about trading crucial. I'm not talking about buying the next chain link at $1, holding it, watching it do 100x. I put 10K in. Hey guys, I made $1 million. That to me is not trading. That's fine. I hope I can do that, you know. But just purely trading, that I've journaled every single trade, screenshotted every trade, done my analysis of it, pre-trade, post-trade, what worked well, what didn't work well, and there's my portfolio. Here's how many trades I took over this many years to get to $10 million. That's my goal. To have it truly structured, journaled, systemized, and there you go. I've done it. Thank you very much.
That's like a work of art.
Thank you. But you've got to have goals, desires, ambitions, you know, because without any goals or pushing the boundaries, what's going to drive you to get there? You know, you've got to have a driver. You've got to have some goal or aim. It's like sometimes when we go to the gym, what's the ideal goal? Some guys, they want to get big. Well, can you envision yourself in that shape? Some people want to get a six pack. What are you going to do to get there? You've got to have a plan, a goal, and a timeline to get there. So for me, when it comes to trading, this is just my personal goal. You know, I could start with more if I wanted to, but no, I want to start with a very small amount, £50,000, just to say this is where I came from and this is what I got to. So yeah, that's it.
It's funny you mentioned the other goals, because the funnest, best bit of this journey will be the journey itself. And when you reach the 10 mil, you'll feel great, but it'll probably be the worst bit because, you know, it's done now.
Yeah, exactly. So you can appreciate that. But I think at that point, I've given myself 10 years. So it's not like I'm trying to do it overnight. It's I do have other trading accounts, you know, that where I will risk more than 50,000. But for me, this is the $50,000 account challenge to 10 mil. And sometimes I could go weeks without taking a trade on it. Sometimes I'll just be actively trading. It just depends on the market condition, because I'd be foolish to sit out on really good trading opportunities where I can risk, six figures on a trade elsewhere. Then I'll just park this account to one side. So I've got to be respective of that and think about that as well, that this isn't something that I'm going to be actively trading all the time, every single time. It's about, okay, I'm going to try to trade this account quite actively, but I may have to park it sometimes, but I'll come back to it and pick up. Because at the end of the day, as a trader, I want to make money. And if there's good opportunities to make good money in this market on a separate account with bigger size, then I'll do that.
So I want to dive into and break down the 50 to 10 mil challenge. So fire away the questions quickly. First one, will you be using the same setups that you've perfected for your other systems that we've spoken about on this podcast?
I will only ever be using two setups, long side and short side, and that's it. And they are built around a strategy that I've perfected for myself that has given me a very good success rate.
Fantastic. And what is your planned risk per trade? Are you going hyper aggressive, something like 5%, or will it be closer to the 1 to 3% mark?
I generally try to risk 5%, but because of my system and strategy, it depends how much of my position gets filled. I scale in. So starting off at 2%, then looking for 4%, and then looking for a full size, full clip position if I can get filled. Sometimes I think as traders, we all try to focus on nailing the perfect entry instead of trying to think about, hang on, why don't we just play the probability of the trade being right and giving yourself time to build the position, as opposed to looking for that one hit entry. And then the minute you're offside, people puke it and the trade works out. So for me, it's about giving the trade room to breathe and develop and hopefully go in my direction.
And does the free layered entry allow for a larger margin of error when you're trying to get into a position?
Yes, because if I'm in 1/3 of a trade and the trade is going against me, I get out for a very, very small loss. Had it been a full-size trade and I take a 1 hour loss, 1/3 trade, if it's back at my entry level and start squeezing, I can cut it knowing that I can get a better entry higher up. I can probably start risking 2/3 now, or go full size, or wait for the confirmation of the breakdown if I'm shorting, go full size, because now I've got my invalidation. Price tried to push me out. It probably did. It's now got acceptance back inside the level that I want to short or long. Now I've got more conviction to go into the trade. So it's about thinking in probabilities for me.
Speaking of probabilities, this is just personal curiosity. When you get the full entry of 5%, what is your win rate with the full 5% entry relative to the other two?
Win rate is 72%. 72%, yeah. Yeah. Because again, it comes down to a single strategy that I trade. The one strategy that I've nailed time and time and time again. And when I'm wrong, Karush, I'm wrong very, very quickly. I'll just cut it straight away. So it's when I cut it straight away, I have a 3-strike rule to assess the trade. Like, am I looking to get back in again? And if I am, then and the trade works out, then I will consider that a win, deducting the slight loss that I took. But overall, the trade idea, the trade setup was a win. But where the difference comes in is the execution strategy. So what was my execution strategy? This is something that I'm refining. How many trades did it take me to nail this one level here? Was it on the first attempt or the second attempt? And if I'm always getting it stopped out on the first attempt, it's telling me that I'm too early into the trade. And if I'm not getting fully filled, then I'm missing out on trade opportunities. So I'm leaving it too late. I need to have more conviction. So I'm just trying to refine just the execution. So, it's funny because people talk about trading strategies, right? I've got a trading strategy, but I've also got a separate, really defined strategy for trade execution that gives me that fluidity when executing around levels.
Yeah, it's overlooked elements. Everyone hyper focuses on 10-20% of trading, ignores the other 80%. You could just look at the view times on the videos. The second people start talking about trading psychology, just dips. The second they start talking about their strategies, it goes up. But luckily, I just want to deliver as much value as possible here, so we'll stay on the stuff which will actually help people,
Yeah, of course, sure.
Okay, so 5% per trade, using this setup, high win rate. Have you started yet, or is this starting soon?
No, I actually started in November to get a head start. It's funny enough you ask, because I took a 10K account to 50K on FX, and that was the primary motive goal, that 50K account will be the account that I took from 10K to 50K, and that 50K pot is now working towards the objective of 10 million. So I have already hit my target for the year. I doubled my account 4 months into the year. So
it's technically 10K to 10 million if you think about it.
Technically it is, yeah, but I'd never. It's unfair because I think back when I started with the 10K account, I was just screwing around on FX. I was just taking trades for the sake of it. I didn't say to myself, right, I'm going to take a 10K account to 10 million. But once I got to 50, I thought, you know what, I'm going to do this. I'm going to take it from 50 to 10 million over a 10-year period.
Right, well, good luck on the $50 to $10 million journey. I'll be following it very closely, and hopefully we'll have a few more podcasts in between, because this has been an absolute pleasure. We've spoken all about your trading. As a final topic, I'd love to know about your investing, your capital management, your long-term position on different assets. What do you do with your personal capital allocation?
Yeah, honestly speaking, since November 2021, I've been in cash 90%. I put 10% back into my trading accounts. I've managed to grow them quite successfully, so it just gives me more capital to invest in the next cycle. And for me, moving forward, it's like I said, heading into a recession, I'm not sure if I want to be taking risk on from an investment perspective. I'd be much more comfortable buying stocks, equities, and Bitcoin for that matter, when I know that we are heading towards the depth of a recession, because that for me is max opportunity. It's looking for the next business economic cycle of growth and expansion in the stock market. So yeah, I think that's how I play the markets, Karush. As a trader, I'm not somebody who's got 100% of my capital on exchanges. Happy, very, very happy, 90% cash. The bulk of my cash will be for those big positional cyclical plays. But as a trader, just taking over very, very nicely.
And those big positional cyclical plays, will that be, a broad-based index fund when you think the bottom is hit, set, buy and forget, or will it be specific stocks?
Unfortunately, I think the macroeconomic regime has changed. I don't think we're going to see an environment that we saw over the last 10, 15 years, zero interest rate policy, just markets on steroids, literally, if that's what we want to call it, especially post-COVID. It was just money print to go burr and everything went up. I think we're going to be in an environment where we're going to see market cycles play out, but you have to be more tactful than thinking I'm the next Warren Buffett. I'm just going to buy this stock and hold it for the next 10, 15 years and I'm going to make millions of dollars. I don't think that's going to be the case anymore. I think the next decade is going to be very, very challenging. And that's where I'm going to be relying upon my technical analysis and price action skills that, all right, I can buy a stock or a share here. I can hold it for maybe 6 to 12 months, maybe 2 years. If it pops off, happy days, I'm cashing out. Or I can trade it on the way back down. That's kind of what I'm thinking. Being very tactful, but positional tactful.
So this might be one place where we deviate slightly in opinion, because people have been saying that about a broad-based investment in the stock market for hundreds of years. Not hundreds, but say 100 years. But the last 150 years of data show that it just averages 8.5% per year. There really isn't a period of longer than 6 years where you could at max see losses. So I'm trying to understand, with that in mind, why you wouldn't, with your non-trading portfolio, be exposed to a non-deflating asset versus cash.
I think part of the reason is it's a good question. I try to think of life outside of markets. So really taking the profits and investing that into perhaps real estate, commercial estate, and looking for yield in that sense. So that's kind of where I'm thinking I can't be relying upon trading or managing portfolios for the rest of my life. I want to live a life where, I can have income generating from other revenues, not solely trading. So that's one way of looking at it, I guess. It's about making money from the markets and then reinvesting that elsewhere. That's going to give me yield. That's probably the high level answer that I can give.
Okay, awesome. Well, thank you for sharing that also. XO, this has been an absolute pleasure. Is there anything you'd like to leave our audience with? There'll be links to all your socials down in the description below. But any final words you want to leave them with before we wrap up this episode?
Yeah, absolutely. They should tune into all your videos because you've got some fantastic educational content. So guys, please check out Karusha's videos. It's been up there for many, many years. It's some of the best trading content that you're going to find. No bullshit. Very well put together. The guy has done it off his own back. And I'm just have to give you a special shout out, Karusha. You're a great guy.
Thanks, man. I really appreciate that. That's kind of you to say, but please do your own content some service before we wrap up the episode.
Oh, well, with myself, it's just my YouTube channels. I don't have any paid services. I don't have any paid groups. It's just me shit posting on Twitter. But if you want my real takes, then just jump on my YouTube live streams and hopefully you can gain some value from there. It's all for free. So, if you do make money, if you do figure out a way to be profitable, then all I ask from people is just to donate a small amount of charity as a blessing on my behalf. That's it, really.
Well, you heard that guy's amazing stream, full coverage of his strategies, his thoughts on the market week by week. Watched a lot of them in preparation for this episode and do watch them outside of preparation for this episode. I think you'll all benefit from them. That's it from me. I'll catch you next time. Bye, everyone.